Hello and welcome to Crypto TV. I'm Renella Hernandez, here to give you a news update on all things Web3 and crypto. Today's episode is about stablecoins, what they are, and the case for why they are likely going to become more and more popular. Let's get into it. This is crypto's biggest use case right now, stablecoins. They are digital representations of fiat currencies like the US dollar on the blockchain. Think USDT, Tether, and USDC coin, for example. Each are fiat-backed, with each dollar on the blockchain being backed by $1 in the bank. There are actually about 200 different stablecoins out there. While stablecoins can actually be denominated in any currency, USD, Euro, Yen, whatever, did you know that 98% of all stablecoins are denominated in US dollars today? Makes sense, given that the USD is still the most used currency in the world and is considered the world's reserve currency. So basically, holding stablecoin is like having dollars sitting on the blockchain instead of in your bank account. And hey, people love them. In fact, stablecoins are now responsible for more than half of the blockchain activity measured in USD, as we can see in this chart. And according to the payments company Visa, which did a study in partnership with Allium Labs, stablecoins handle nearly $3 trillion in monthly volume and account for 31 million active users in the past month. Now, of course, this isn't all purely organic payments activity and users. Lots of transactions are initiated by bots and large-scale traders. Nevertheless, as stablecoins are increasingly being integrated into major payment networks, such as those run by Visa, Stripe, PayPal, WorldPay, Nuvei, or MoneyGram, to name a few, this is a clear sign that the convergence between crypto and TradFi is finally actually happening, with stablecoins leading as the most important application of public blockchains. Nick Carter, a partner at the Castle Island Ventures, recently stated in a Medium post that stablecoins have dollarized the crypto market, and they are crypto-dollarizing a whole host of economies, particularly in emerging markets. He questions the long-term prospects for tokens like Bitcoin, Solana, or Ether in a world where most transactions on-chain are settled in stables. Indeed, I recently spoke to Pekka Wan, who is the co-CEO of Pundi, a company that developed a point-of-sale device for merchants to accept and sell crypto. And she mentioned that 70% of transactions are settled in stablecoins for their hundreds of merchants all over the world. And the company's biggest markets are currently Turkey and South Africa. So make sure to go watch that interview with Pekka if you'd like to learn more about Pundi and stablecoins. The link is in the description. You see, the thing is that stablecoins are pretty much immune to bear markets. If we look at 2022 and 2023 bear markets, unique active addresses and transactions are up considerably since 2020. And this is a positive trend that is continually growing. In this case, it's not about investing in the next coin that will 10x, but rather investors can still capitalize on investments that allow them to capture the upside of stablecoins. By the way, I'm talking about fiat-backed stablecoins here and not crypto-backed ones like DAI by Maker or USDE by Athena, or even algorithmic stablecoins like the defunct Terra Luna. But we don't talk about that. Now, let's talk about why people actually care to use a dollar on-chain rather than in the bank. There are three main demand drivers for stablecoins. The first is that for hundreds of millions of people around the world, their local currency is inflating at an increasingly alarming high rate per year. And this is eating away at their savings, unfortunately. Think Venezuelan bolivars or Turkish lira, countries with the highest inflation rates in the world. Stablecoins can give people in these countries access to US dollars that they wouldn't have otherwise, as long as they have an internet connection, of course. And secondly, sending traditional fiat currency is often slow and expensive, especially via bank wires. And then there are the high remittances fees. Companies like Western Union, for example, charge up to 30% of the transferred amount for sending money internationally. Stablecoins, on the other hand, offer a solution by making transactions instant and usually almost always free, anywhere in the world. Thirdly, there are yield opportunities for investors. Since blockchain offers higher yields than traditional finance vehicles, this might attract more users. Let's actually go back to Visa's dashboard and look at the weekly volumes of 4 selected stablecoins. We've got USDC, USDT, PayPal's PYUSD, and Paxos's USDP. This helps us to see how much value is being processed using stablecoins on a weekly basis. Since the beginning of 2024, the weekly volume has been on a strong uptrend, and we can see the weeks with $600 billion to $800 billion in weekly volumes. For context, Visa processes about $300 billion in weekly volume. And increased weekly volume has led to an increased number of stablecoin transactions. So we can see that since October 2023, the number of transactions has doubled to around 350 million transactions per month. And if we look at the number of users, there are about 28 million addresses interacting with stablecoins on the blockchain monthly. So we still have a long way to go. But I'm betting on the growth of stablecoin use, especially for individuals living in unstable currency regimes, for digital nomads who can get their salaries paid in crypto from anywhere in the world, emerging financial hubs, and even the US government. On the flip side, of course, the governments with unstable currencies won't like it, and nor will banks or law enforcement. But hey, it's a trade-off for the greater good, isn't it? And if stablecoins reach an all-time high in volume, then that means that Bitcoin, BTC, will actually start to stabilize, because otherwise, if stablecoins fall, then BTC goes up, and that raises everything else. But hey, speaking of BTC, let's see how it's doing today.
Today in the crypto market, Bitcoin is currently trading at $66,024. Ether's price is at $3,591 today. SOL is down this week, trading $138.74 today. And Fetch.ai is going up today, trading at $1.65 now.
That is all for today on my spiel about stablecoins. Please let me know your thoughts in the comments, and thank you for tuning in to this week's Crypto TV. Make sure to give this video a like and to check out this week's Crypto TV conversation with Peko Wan from Pundi X. And tune in next week to Crypto TV for more news that you wouldn't want to miss.